AI stocks have been on a tear in the last couple of years, rising on the momentum of ChatGPT. There are a few remaining undervalued AI stocks, and one of them, I think, is Qualcomm. So, investors that are interested in this undervalued AI stock, here are some things that you absolutely need to know about this company at the very least. So, this isn't everything you should know, but at the very least, these are things you should know about Qualcomm stock if you're interested in purchasing this AI company. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So one of the categories that Qualcomm is making a major push in is driverless car technology with its Snapdragon Cockpit Elite and Snapdragon Ride Elite platforms. Both feature their category-leading custom Orion CPU, which are optimized for automotive safety standards and designed for 3 times faster CPU performance over previous generations. AI in assisted driving workloads feature their dedicated Hexagon NPU with up to 12 times increased AI performance over previous generation, which is a substantial upgrade. Of course, if you're going to have cars driving themselves, they need to be more capable than they are today. They need to be able to make quick decisions based on information they gather, both visual information, audio information, sensor information. All of that needs to be computed and translated into insights for the vehicle's system to make decisions on. And so these need to work extremely well, and they need to be tested and perform extremely well during tests in order to get regulators comfortable with allowing these cars on the road. Already in several large cities in the United States, we have driverless cars all over the place, especially here in Los Angeles, where actually this morning, Waymo extended its driverless car capabilities to anyone who wants a ride using its driverless cars here. And I've been seeing them all over the place, and they're also all over the place in San Francisco. So as this industry takes off, Qualcomm is in an excellent position to capitalize on that growth. In fact, it's been one of the fastest growing categories for Qualcomm in recent quarters. The Ride Elite platform offers an end-to-end ADAS system, which is driverless cars, with advanced features such as vision perception, sensor fusion, path planning, localization, and complete vehicle control. Already, leading car manufacturers are adopting this platform for their future software-defined vehicles, including Li Auto and Mercedes-Benz, which is holding a leadership position. Mercedes-Benz is on vehicle autonomy. It's one of the leading manufacturers in this category. You might be surprised to hear there's a lot of publicity about the work that Tesla's been doing in this category because Tesla and its CEO is very vocal about it. Every little progress they make, they hold a press conference and they have a presentation and they show you the little progress that they've made. Mercedes-Benz is not so vocal and not so public about the progress they're making, but they're well ahead of Tesla in driverless car technology the last time I checked in their levels of autonomy features. Li Auto, I don't know as much about. That's a company in China. I know they're making great progress as well. The driverless car technology in China, I suspect, will develop much faster than here in the United States because of the regulatory environment in China. They have a more centralized regulatory environment where approvals can be quicker, whereas here in the US, the regulatory environment is very bureaucratic and lumpy and takes a long time, longer than it should. And so that's why I think it's going to go faster in China. And then in the United States, even if we're going to be ahead in the technology aspect of it, we're going to be behind in terms of the regulatory environment. Moving on to the company's financials, they delivered $39 billion in revenue and earnings per share of $10.22, which was a growth of 21% year over year. And this was driven by technology leadership of their premium tier Snapdragon products and normalization of channel inventory. The the semiconductor industry has been recovering from a cyclical bottom, and every area of the industry is recovering slowly, except for anything related to AI, which is absolutely thriving. So anything outside of AI, think of chips for personal computers, laptops, smartphones, industrial use cases, all of those are recovering very slowly, but anything related to artificial intelligence is surging. That's the position of the semiconductor industry as it stands today. So in a challenging industry environment, they delivered full year revenue growth of 55% in their automotive segment, which we discussed earlier. It's their fastest growing segment. Their most important segment, I would say, in terms of revenue and profit, is the smartphone segment, handsets, but that segment is not growing anywhere near the pace of the automotive segment, which is much smaller in revenue and profit terms, but it's growing much faster. So their business overall generated $11.2 billion in free cash flow on revenue of $39 billion. That's more than 25% in free cash flow yield to revenue, which is a solid number to be sure. Speaking of the handset market, they now expect global 3, 4, 5G handset units to increase by low to mid-single digit percentages on a year-over-year basis in the calendar year 2024. So this is a more optimistic outlook than they were expecting to begin the year. Smartphone sales turned out to be better than expected in 2024. But also, another thing that's happening within the smartphone segment is premiumization, where maybe the number of units of growth is not that robust. What has been going on within the smartphone industry is people have been buying more premium smartphones. So whereas maybe last year they would be interested, let's say, in a $400 smartphone, this year they might be more interested in a $500 smartphone. And that's been going on across the market. So everyone's been looking for a little bit more premium a smartphone than they were last year. People are interested in more premium smartphones. And that's good news for Qualcomm, because the more premium smartphones have more components inside, and that means more sales for Qualcomm. And that's been good news within a market that's primarily saturated, not growing quickly. You're having that premiumization driving revenue growth for companies like Qualcomm. So the company expects the automotive segment to continue growing over 50% compared to last year in the fourth quarter. So that's the segment that's going to drive growth for Qualcomm next quarter, while the smartphone market will be still growing but more subdued. And if you're interested in Qualcomm stock, these are some of the things that you should know. There's a lot more to this company, and I have dozens of videos on Qualcomm stock on my channel. I encourage you to watch, you don't have to watch all of them, but watch more of those videos before you come to a conclusion on whether or not to buy Qualcomm stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.